Imagine you have a payment plan set up with the Internal Revenue Service, a helpful way to manage your tax debt, but then life happens and you miss a payment or cannot meet a condition. What is the immediate impact of that misstep? If you default on an Internal Revenue Service installment agreement, the agency will terminate the agreement and restart its collection efforts. This means the full amount of your unpaid taxes, plus any penalties and interest, immediately becomes due and payable. The reason for this is that an installment agreement is a legally binding contract between you and the Internal Revenue Service. When you fail to make a scheduled payment or do not meet another condition, such as filing future tax returns on time or paying current taxes, you have breached the terms of that agreement. The Internal Revenue Service then loses the assurance that you will fulfill your tax obligation under the original plan, which triggers their right to pursue other enforcement actions to collect the outstanding balance. To avoid the most severe consequences, if you realize you are going to miss a payment or have already missed one, the most important step is to contact the Internal Revenue Service immediately. Do not wait for them to contact you first. Explain your situation and ask about your options. You might be able to reinstate the agreement, especially if your default is a first-time occurrence, or they might offer alternative payment arrangements. Always respond promptly to any notices you receive from the Internal Revenue Service regarding your defaulted agreement. One key consequence of a defaulted installment agreement is the potential for the Internal Revenue Service to issue a notice of intent to levy. This is a formal warning that they plan to seize assets, such as wages, bank accounts, or even property, to satisfy the debt. You typically have 30 days from the date of this notice to appeal the decision and request a collection due process hearing to discuss other collection alternatives, like an offer in compromise, which allows certain taxpayers to resolve their tax liability with the Internal Revenue Service for a lower amount than what they originally owe. Understanding the seriousness of defaulting on an installment agreement empowers you to act quickly and proactively. By communicating with the Internal Revenue Service and exploring your options as soon as issues arise, you can often mitigate harsher collection actions and work towards a more manageable resolution for your tax obligations.